Wall Street is looking to end the week on a strong note after reaching new heights on Thursday. The Dow Jones Industrial Average briefly crossed over the 40,000 threshold for the first time.
Yeah, but it lost a little steam, finishing the day just below the mark, down 38 points for the day. This comes days after the Consumer Price Index report showed inflation cooling slightly in April.
Investopedia editor-in-chief Caleb Silver joins us with more on this milestone. Caleb, good morning. Good to have you with us. So we know the Dow up 6% so far this year. The other major indices, the NASDAQ and S&P, are up about 11%. So 40,000, it's a nice round number. That's why we talk about it. But what does this milestone say about the current state of the economy?
Well, it's a bifurcated economy, and it's a great time to be a shareholder. And we love these big round numbers on Wall Street, and investors like to see charts that go up and to the right. We've seen that across the stock market right now. But as you know, and as we keep saying, the stock market and the economy, not the same thing. Sometimes they show up at the same party. Right now, the stock market is anticipating the economy is getting into a better place right now, more Goldilocks, right? A slowing labor market. That's actually good news because a hot labor market drives up inflation, and cooling inflation, that's where we need to be right now, and corporate profits are looking good. So investors are looking into the future, and they like what they see, which is why we're at these new record highs yet again.
Yeah, so how much, Caleb, did that inflation report play in here? The fact that it did cool a little bit, is that renewing investors' hopes for a potential soft landing?
Yeah, that's that soft landing we've been talking about, a cooling labor market and cooling prices. Now, prices are not going down. We're not having deflation or even disinflation. We're just having a slower rate of growth for prices. Prices are going to be up for a while. That said, corporate profits, which is what investors care about, they're getting better and better, and they look like they're going to get better towards the end of the year when the Federal Reserve might cut interest rates to jumpstart the economy again. All of that is a good recipe for higher stock prices. That's why we've seen this rally coming out of April, where we didn't know which direction the economy was going. Now we have a better picture. When we can't see the future, it's like kryptonite, but now we can. So the stock market at or near record highs, the economy and the real feel of the economy on the ground, consumers not feeling that great because of these high prices.
So Caleb, you're a numbers guy. I'll read some more numbers here. First quarter of this year, about 3/4 of all firms beat earnings estimates. 401k retirement accounts up 17% from March of 2023 to March of this year. Are these indicators of where the economy is headed as we head into the halfway point of this year? I mean, what is it you're looking forward to moving forward?
Yeah, it's all about the consumer, right? Are we going to continue to spend? Retail sales were a little bit soft last month. Some of that's tax season. Some of that is that we're just tapped out, right? Higher prices make us pull back on our spending, and you're hearing it from McDonald's, you're hearing it from Costco, Home Depot. We're going down menu, we're buying cheaper things, bigger, smaller receipts when we go to buy things. If consumers continue to pull back on spending, that's not going to be great for the economy or the stock market. But right now, we continue to do it, even though credit card debt continues to reach record highs.
Caleb, we know that we're getting some of these good indicators here, but then we hear a lot still that people don't feel great about it. Polling heading into the election showing that people don't feel great about the economy and how important that is to them when they vote. Is crossing a milestone like this, getting this good news about the Dow Jones, could that turn that attitude around?
It does have the wealth effect where people feel a little bit better when they look at their 401ks or their IRAs. But for most people who are getting by paycheck to paycheck, the price of everything just keeps getting more expensive, so they don't feel it, even though they might be invested in the stock market passively through their retirement accounts. It's the week-to-week bills that they have to pay that are making them feel pretty dour about the economy. Consumer confidence pretty low, and expectations for more inflation are still pretty high. Not a great recipe going into the election season, but for shareholders, it's a great time to be invested because you have had an incredible run since really October of 2022.
All right. Caleb Silver, as always, thank you so much.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.